Hello everyone, investment scams rampant. Please vigilant and discerning. Do not trust information from unknown sources. Please make sure recognize two official Capital Securities community, Facebook, Capital Securities, YouTube, Capital Wealth Insights.
Welcome to Monday's King Yi Night Watch with analyst Jang Jada. Please like, subscribe, and share. Leave investment questions below. If not answered today, I'll explain them in tomorrow's class. Whether in live chat or on the message board, I'll see your comments. First, let's look at today's investment highlights. But before that, remember, January is over and February is here. In the coming months, the market will have its ups and downs. So what should you do? Just tune in to the Chunyin Morning Call with Mr. Fan and watch the Chunyin Goodnight live stream in the evening. For Taiwan, U.S., or international financial news, Chunyin Investment Advisory provides the latest updates firsthand. Good evening, everyone. Anyway, now it's February. What's the happiest thing about February? The best part is getting ready for the new year. I remember last Friday, I recorded a short 3-minute audio for the Chunyin Weekend Report, and a student left a comment saying, "Teacher, your dark circles look really deep. You should get more rest." And it's true. I realized lately that because I've been working more night shifts, it's been a bit... My schedule is unpredictable, making my dark circles worse. It is unavoidable. Monitoring global markets day and night means sleep is scarce. I will rest during Lunar New Year. Thanks for your concern. Thanks. Good evening, everyone. Hello to Hui Huan Huan, Medaizi, Yulun, Flying Fish, Alice, Melissa, Little Donkey, and Anna. Little Donkey noted the Taiwan market is acting up again. Indeed, it opened lower today but recovered slightly by the close. Actually, the big players in the market are still coming in, which is good. Also, good evening to Jeff Lin as well. Good evening. Okay, so let's get started. Today's investment focus... Oh, and Auntie wants to remind everyone, lately the weather has been changing quite a bit. I heard that this Saturday the weather's going to change, and the temperature will drop to around 8 to 9 degrees throughout the whole period. Saturday, Sunday, and next Monday. These 3 days might see a change in weather, with temperatures around 10 degrees. So everyone, please pay extra attention and keep an eye on it. Even though it seems like the weather will warm up in a couple of days, it's going to drop again this weekend. Basically, the weather keeps going back and forth, so make sure to take good care of your health. Alright, moving on to the investment focus section, let's take a look at the scapegoat, the Federal Reserve. What's going on with the Fed? Well, this week, of course, we'll also give you a first look or preview of the key economic data and earnings reports coming up. Now, why do I call the Fed the scapegoat? I actually think the Fed is pretty pitiful, because last week, you probably noticed that Trump decided to announce the list of candidates for the new Federal Reserve chair, and that's the former board member, Waller. As soon as Waller was nominated, the market was like, wow, it's not Hassett and it's not Warsh. It's not one of those really dovish officials, but instead, it's a former board member. So what's this board member's background, and why does the market actually see him as a representative of the hawks? With such a hawkish representative appearing, you'll notice that the stock, bond, and commodity markets all took a nosedive. Following this sharp drop in stocks and gold, everyone started blaming the new nominee, Waller, for the downturn, because he is seen as significantly more hawkish. But on the other hand, I think we need to have a word with everyone, and maybe even give Waller a bit of a lesson here. Over the past couple of days, starting from last week's drop and including today's pre-market U.S. stock futures, we've seen a pretty significant pullback. But is this pullback really all Waller's fault? I don't think it's that simple. I'll explain why in a bit. If we look at his background, his past statements, and the reasons why Trump appointed him, there's actually a lot of political calculation and maneuvering involved. It's not just as simple as saying, wow, he can use him again. So when it comes to the stock and bond markets dropping, it's really not that straightforward. I'll explain why in a bit. Of course, the most important thing is, There's some economic data and earnings reports being released this week, and the earnings reports are especially important. As for the Magnificent Seven tech giants, a few of them will also be releasing their earnings this week. Besides the four companies among the Magnificent Seven that already reported at the end of last week, like Apple, Amazon, Microsoft, and so on, this week, companies like Google and Qualcomm will also be reporting. Now, in terms of the industry side, Jensen Huang visited Taiwan in late January, dining with industry leaders at a famous banquet. During this time, he noted rumors that OpenAI may have received a $100 billion investment last September. But during this interview, Jensen Huang specifically clarified that it wasn't as much as everyone imagined. That was just a rumor. While there will be investments in the future, it's not going to be as high as $100 billion like people think. So what kind of impact will this have on OpenAI, Microsoft, or even the development of AI and the so-called AI perpetual motion machine? That's something everyone should pay close attention to. Then, of course, since we're talking about the AI perpetual motion machine, let's talk a bit more about Oracle. Oracle is actually one of the most important players in the so-called AI perpetual motion machine. However, its stock price has been dropping steadily, starting from around August or September last year and continuing to fall up to now. And today, there's another piece of news about Oracle. It says, they announced that they're going to issue more bonds, borrowing more money. So what's really going on? With Oracle's stock price dropping to this level, and now they're issuing more bonds and borrowing more money, does this count as good news or bad news for their stock? With the price so low now, is it really not a good time to buy? Oracle is one of the key members of the AI perpetual motion machine. Can it really not be bought? I'll explain all of this to everyone in a bit. All right, good evening, banana fragrance. Good night. The night market rebounded to 270. Okay. And then what's this? Hey, who is this? All right, let me take a look at your comments. The weather in Taiwan shouldn't be too comfortable in the future, right? It's like minus 10 something degrees here, isn't it? Okay, take care of yourself. I think you live in the US, so the weather there might be even colder. All right, let's give a quick preview of the investment highlights. As for economic data, at 5 p.m. today, we had the Eurozone's January manufacturing PMI. This data is pretty neutral. Previous was 49.4, expected was 49.4, and the actual number came in just a bit higher at 49.5. It's still just a little shy of the 50-point boom or bust threshold, but it hasn't slipped into recession because the Eurozone's manufacturing PMI, the red line, has gradually climbed since 2023, when it was 42.7. By 2025, the PMI was hovering around 48 or 49. Eurozone manufacturing PMI shows a gradual upward trend. Though below 50, no major issues appear. The ECB will likely hold rates this week, skipping cuts for now. At 10:45 p.m., watch the U.S. S&P Global Manufacturing PMI. Previous 51.9, expected 52. This data helps observe trends. SIDEC monitors this because generally, U.S. services PMI is typically more vital than manufacturing, but this data remains relevant as it stays above the 50 expansion threshold. Readings above 50 signal growth, while below 50 suggest contraction. Watch this data at 10:45 p.m. tonight. All January figures are the latest available. Unlike late last year when government shutdowns delayed indicators, current data is up to date. The January U.S. ISM manufacturing PMI releases at 11 p.m. Previous was 47.9, forecast is 48.5. Since it's been below 50 for a while, there's little to note. How should you look at it? It's simple. When you look at these manufacturing data, especially for the US, just remember, as long as the numbers don't differ too much from the previous value or the forecast, it's fine. For example, if the previous value was 47.9 and this time it suddenly drops to 42 or below, that would be a problem. But as long as the gap isn't that big, it means the US economy isn't heading toward a recession, so there's really nothing major to worry about. Oh, on the other hand, since the economy isn't heading toward a recession, does the Fed really need to aggressively cut interest rates? So it's really not that necessary. So how about the state of the economy? Actually, it's like two sides of the same coin. A strong economy means the US stock market and the US economy are both doing well, the fundamentals are solid, but at the same time, it means there's less need for aggressive or frequent rate cuts. So when you look at it this way, deep grab chain, good night. Oh, and I remember there was a comment last week. I think it was left on the Seeking Weekend wrap-up. Thank you. Hello, S-Boys. Good night. Also, good night and good evening to S.Y. Rue. Microsoft's earnings were actually quite good and met expectations. The main criticism is their high capital expenditures. Investors worry if spending on OpenAI and AI development will ever pay off. However, there's no need for concern. Despite the heavy investment, that capital will eventually return. Meta's capital spending exceeds Microsoft's, projected at $100 to $130 billion this year. Meta remains confident in their returns. Meanwhile, Oracle moves slower, but Microsoft's position remains secure. Why did Microsoft's stock drop despite beating earnings expectations? One reason is rising capital expenditures. Investors worry about ROI and market expectations. Also, their report noted that fourth quarter gross margins was around 68%, I think, which is a new 3-year low. So this is what made everyone feel, oh no, the gross margin has dropped, which is a warning sign. That's why their stock price fell by 10%. I remember it plunged with a big gap down. Of course, I'll also update everyone on Microsoft's stock price in a bit. Today, since we're talking about Jensen Huang, who has some connections with Microsoft and with OpenAI, let's first preview the economic data for everyone. As for the officials' remarks, Mester and quickly Bostic. Musa and Mester are the same. These two officials, if I remember correctly, neither of them are voting members this year, not committee members yet. In 2026, they still will not have a vote. Both Bostic and Mester said that at this stage, the FOMC does not need to rush into rate cuts, because right now, it is better to be patient and wait and see regarding interest rate decisions. They believe further rate cuts are not advisable. Moreover, they think the current policy has already reached what is called the neutral rate. The so-called neutral rate refers to an interest rate that neither overheats nor cools down the economy. It's a balanced rate, the neutral rate. So, like Bostic and Mester, they believe there's no rush to cut rates right now. But Waller, yes, Chris Waller, he was, just a few days ago, originally among the three, let's say the WOWO group. Among the three candidates for the Fed chair, one of the hot topics is Waller. He's currently a board member. Now, Waller is considered more dovish. He also says that the current interest rate, which is around 3.5 to 3.75, should be the neutral rate. The neutral rate, meaning the rate that's neither good nor bad, should be about 3%. In other words, with the current rate at 3.5, he thinks the neutral rate should be around 3%, so he believes there's still room for about 2 rate cuts. Because if the current interest rate is still a bit on the high side, okay, so his dovish stance hasn't changed. In other words, these officials, whether they're dovish or hawkish, continue to be divided. That means rates will likely stay unchanged in January and maybe even in March as well. So the months when we might see bigger fluctuations could be around May or June to May, for example. At that time, Federal Reserve Chairman Powell might step down, and whoever takes over as the new chair, we don't know who that will be yet, maybe it's Waller. After the new chair, who is currently a new governor, takes office, the earliest possible time for them to make a move would be the mid-June rate decision, which could be their first chance to show what they've got. That's why we've mentioned to everyone before, how many times might the Fed cut rates? Likely once or twice, starting by June. Another cut could follow in September or November, near the elections. Making a big move with policy rate adjustments like that, so this year it looks like we can still expect 1 or 2 cuts. As for the news about the Senate, just take a quick look at it, that's all. And Caesar, good evening, hello, hello. Haven't seen you in days. Thank you, it's only been a week since we last met. Let me explain, everyone's been busy in January. Last year, around November and December, because I had a lot of annual leave to take, so last November and December, I took about 10 days, more than 10 days of annual leave and finished it all. So I really couldn't go to the branch offices to give talks because it was just 1 week of live streaming. Then the next week I'd take daytime shifts and quickly finish my leave. So last November and December, I couldn't do any talks or support. Then this January was also really busy. And as January went on, February came and it was Chinese New Year. After the new year, a lot of people started live streaming again. So the soonest, because some students were asking about which talks are happening in the North, Central, and South regions, for example, I can likely provide resources again after the new year, probably in March. This means I only visit branch offices about 9 months a year. The other months are very busy, especially as my schedule packs up toward year end. Anyway, no matter what, if there's any latest news, like if there are some investment seminars in the North, Central, or South, and if I'm able to go and provide support, I'll definitely share it with everyone right away during the Coin and Goodnight live stream. And of course, when it comes to salary, everyone is welcome to. Whether you're joining online or in person, these seminars allow for interaction both ways. I'm really looking forward to meeting everyone at the event venue, chatting with y'all, and discussing all sorts of investment topics. All right, now let's take a look at the Senate. Regarding the Senate, it's been said that even though they pass bills to fund most government departments, there are still some government shutdowns. Honestly, this is just something to be aware of. I want to remind everyone that the US is holding midterm elections this year. Last October, they already dealt with a government shutdown, and it dragged on for quite a while, 43 days to be exact, which set a new record for the longest shutdown in history. So basically, this year, because of the so-called midterm elections, they likely won't fail. I still think this bill will pass because repeated shutdowns harm livelihoods, the economy, and inflation. Regardless of party, this chaos is unsustainable. The public will be frustrated, asking why the government keeps shutting down. Shutdowns cause major inconveniences, leading people to scrutinize who is blocking the bill. Any party blocking this bill opposes the people. Don't worry about a long government shutdown this year. It won't get that bad. Doing so would only disadvantage them in the upcoming midterm elections. So this year, whenever you see news about the government shutting down or not, or talk about government closures, running out of money, and so on, just take it in stride. Honestly, the impact is really minimal, almost unimportant. It's just something in the news, so don't take it to heart or pay it special attention. Just look at it neutrally. In this election year, politicians avoid risks. Regarding Trump's new board appointee, he seems a mere scapegoat. He hasn't even started yet. Told in May he would start June 6th, he still hasn't taken office. When stocks, gold, and raw materials fell, everyone just blamed him. They pinned all the problems on him. So what exactly happened? Now let's take a look at Trump. Trump nominated this former board member, Warsh, to serve as the new chairman, and the chances of him actually getting the position are pretty high. He's basically set to get it. Right now, there are 3 hurdles he's facing. Let me briefly mention these 3 hurdles. The first one is, so this candidate for chairman first has to be sent to the Senate Banking Committee for a hearing. What's the purpose of this hearing? The hearing is to see whether Warsh, as the new chairman, has enough policy independence and how well he would perform in the face of a financial crisis. That's basically what it's about. It's expected that the hearing might be held around March or April this year. If the hearing is approved, then the voting proposal with the candidate's name will be sent to the full Senate for a vote. Once the Senate passes it, there shouldn't be any major issues. So after Powell steps down in May, the earliest the new chairman could take over would be at the June meeting, the one in mid-June, where the new chairman would preside over the interest rate decision. So regarding this new chairman, everyone should keep one thing in mind, because this person has to pass both the hearing by the banking committee and a full vote in the Senate. They can't be too dovish. They still need to have enough of what we call the Federal Reserve's independence. They can't be influenced by politics, the Treasury Department, officials, or by Trump. They need to have a certain degree of independence, and they also can't be too dovish, but of course, they can't be too hawkish either. So they must have enough independent judgment. If the candidate meets these requirements, it will be easier for them to take on the role. That's why the market thought Hassett had a high chance of appointment. He is very dovish. As an advisor, Hassett basically agrees with whatever Trump says and insists on following through exactly as told. But the big problem is that his policy independence might be criticized. Maybe, whether it's in the Senate, the House, or in various hearings and committees, there will be Republicans present, but these people may not necessarily support him. Even though they're Republicans, they might not support him. Some of them are more conservative, and they might not agree with having a new chairman who just blindly follows everything Trump says. Even though they want rate cuts and also hope to stand with Trump, they still don't want a brand new Chairman Lynn to lean completely toward a very biased direction instead of maintaining the independence of political or financial policy. Okay, so regardless of whether it's the Democrats or the Republicans, there will always be some voices of opposition. So how do you make sure this chairman isn't too dovish, but also not too hawkish, while still maintaining a certain level of independence? On top of that, they also have to listen to Trump. That's why the selection of this candidate has to be extremely, extremely careful. That's why you saw the process go from Waller to Hassett, and in the end, it surprisingly landed on who? On Warsh. There's a reason for this, because as I just mentioned, they have to maintain enough independence. Of course, aside from talking about Warsh, let's first discuss his background, which is very important. But first, let me answer a question from a student. Caesar asked, should we reduce our positions now? The market has dropped a lot in the past couple of days. Both US and Japanese stocks have fallen. About how much should we expect them to rise or fall? Actually, we've always reminded everyone that when it comes to your positions, whenever the market hits new highs, you should be taking some profits off the table. No need to sell everything at once. Sell in batches like halves or thirds. When the market drops, trim positions or rotate lower. If you've already sold some, you'll have capital to rebuild as prices fall. But if the price hit new highs and you miss chances to sell, you'll feel much more pressure when it drops, because if you can't exit now, remember that during pullbacks, consider selling good companies partially. Lighten up by reducing positions in small amounts and rebuilding in batches, as the market isn't bearish yet. When a rebound or new high occurs, seize the tempo by taking profits on long positions while prices are high. Buy when prices drop, buy dips, not rallies. This is key for building positions. Allocate gradually, using a quarter or third at a time. He's 80% invested and made profits last week, but today Japanese stocks plunged. He struggles with position management. As I mentioned, regardless of position size, remember to scale out when high and scale in when low. Also, another thing is vital. It's actually not bad that you currently only have 80% of your position in play and you're not going all in. At least you still have about 20 to 30% of your funds left, so if you come across a good company or a good entry point, you still have the chance to build your position. That's a good thing at any point in time. Never, at any time, should you go all in on anything, because we never know when we might suddenly encounter a black swan event or a gray rhino. Going all in is inherently riskier. Some high-risk investors might say, "Teacher, I can't sleep unless I go all in. I just have to do it. I love the thrill of volatility." Everyone has a different investment profile. If you must go all in, that's you. But if I go all in, I can't sleep. If my position exceeds 80%, I lose sleep, so I keep it below 80 or even 70%. I buy and sell slowly, taking it step by step. So I always keep about 30% in cash on hand, just in case I need it. That's how I do things, so you can use that as a reference. As for Nvidia, it's really strong. If I remember right, it hit over $600. SanDisk is also pretty strong. Yeah, pretty strong. Micron isn't bad either. The long-term trend remains positive, but in the short term, overextended assets eventually pull back. After a big run-up, a correction is natural, and when it occurs, investors seek negative news to justify the dip. But since they can't really find any negatives because the fundamentals are solid, if they can't find any real negatives, they'll just pin it on the Fed, so the Fed ends up taking the blame. So honestly, do you really think that just because the Fed chair took office, that's the reason why the international stock markets or the US stock market are crashing? I really think that's just an exaggeration. Honestly, it's just a lot of these stocks have just gone up too much. They just need an excuse to come down. And it just so happens that the Fed chair took office, so the Fed gets blamed. But actually, if you look at the Fed chair's background, it's actually pretty positive for the stock market, the economy, and the way the Fed operates. Honestly, it's more positive than negative. Having them in the role is definitely better than having Hassett, and compared to Waller, maybe they're about the same as the current Waller. They're about the same, so I actually think it's a good thing for the Fed chair to take on this new role. For the independence of the Fed's policies and for economic stability, I think it's better than if Hassett were in charge. Right now, the market is worried that he's too hawkish. But let's be real, if he were really that hawkish, Trump wouldn't have picked him to be the Fed chair. You get what I mean? If he were extremely hawkish, refusing to cut rates at all, insisting on shrinking the balance sheet and constantly tightening the job market, because he does support reducing the balance sheet. If he wanted to shrink the entire BS, not do any QE, and just support tightening as much as possible, then Trump wouldn't have chosen him. He would want rates to be higher to suppress inflation. If you were really that tough, if you were really that unwilling to ease, Trump wouldn't have picked him for the job. So actually, behind the scenes, I believe he and Trump have some kind of tacit understanding. They must have already discussed and agreed on certain things before letting him become the new Fed chair. Otherwise, Trump could have just picked Hasid. He could have picked me, Berman, or others. Why Powell? His background is vital. Born in 1970, he's 55, quite young. With a Stanford bachelor's and a Harvard law doctorate, his credentials are solid. His experience is excellent and finance-focused. He spent 7 years at Morgan Stanley in mergers and acquisitions, eventually becoming a vice president there. That's also quite a high-level position. Then, from 2002 to 2006, he also served as a special assistant for economic policy under President George W. Bush. So he has experience in industry, academia, and economic policy. He's got relevant credentials in all those areas. From 2006 to 2011, he served as the youngest governor in the history of the Fed. At that time, in 2006, he was only 35 years old. Just think about it. When I was 35, I didn't even know what I was doing, but at 35, he was already a Fed governor. Fed governors have permanent voting rights. Between 2006 and 2011, he served as the youngest governor in history at age 35. During the 2008 Lehman Brothers collapse, he was a key aide to Ben Bernanke, helping manage the financial crisis. In office, he fought inflation with high interest rates. His background is undeniably strong. All committee members are capable, or they wouldn't hold such positions. Crucially, he has another area of expertise. His background is extremely solid, partly because of his wife, so sometimes marrying a good wife is really important. His wife is Jane Lauder. Who is Jane Lauder? She's a member of the Estee Lauder family, which means she comes from wealth. It's said that her net worth is around $2.6 billion, So marrying a good wife like Jane Lauder really makes a difference. And who is his father-in-law? His father-in-law is Ronald Lauder, also from the Estee Lauder family. Who is Ronald Lauder? He's the son of the founder of Estee Lauder. Estee Lauder, if you use cosmetics, most women should know the brand. She's the founder, and her son is Ronald Lauder. His daughter is Jane Lauder. She didn't sell to anyone. Who did she marry? She married this guy. So that's how it is. With this impressive academic, business, and political background, his connections are normal and relationships strong. His father-in-law, Ronald Lauder, is Trump's friend and financial backer. So in 2017, Trump nearly picked Walsh as director but ultimately chose Powell. Anyway, putting aside the issues with his background and connections, let's take a look at what kind of impact it would have if Walsh were actually elected. First of all, because of his strong academic and business background, and the fact that he comes from the Federal Reserve System, he's from the financial sector, right? So when it comes to cutting or raising interest rates, he would actually lean more toward a rational approach. He'd be more inclined to make decisions and take action based on reason. On the other hand, in the short term, people are worried because in the past, not now, but back in 2008 and 2006, when he was serving as an assistant to Chairman Bernanke, he tended to be more supportive. He was more hawkish back then, supporting aggressive measures and higher interest rates, but that was the hawkish stance of the past. It doesn't mean he's hawkish now, that's for sure. If you were still hawkish now, honestly, Trump wouldn't even consider picking him. So yes, he was hawkish before, but because of that, people are now worried that once he takes office, he might refuse to cut rates or even raise them and try to curb inflation and so on. He belongs to the rational camp, adjusting rates rationally. This rationality aids overall financial stability. Short-term worry leads people to think the Fed won't cut rates aggressively. Consequently, gold, silver, stocks, and bonds all drop. That's how things play out. Only the US dollar rises. It strengthens as expectations of a weak dollar fade due to less aggressive Fed rate cuts. A strong dollar actually offers more benefits than a weak one. When the dollar is strong, US funds and money won't flow out of the US because the dollar is strong and bounces back. If the dollar is too weak, then all that money flows to other countries, to emerging markets, to Europe. In fact, that's actually not good for the US stock market or for capital inflows into US stocks. So you don't want the dollar to be too weak. Having it a bit stronger is actually better. That's why the dollar has rebounded in the past couple of days. Okay, another thing is that the independence of its policy background also gives it a better chance to be selected as the Fed chair. So we think that actually, this time, Waller being, you've taken so much blame for this, so in the short term, it might be somewhat negative for the stock market, bond market, and for gold and silver. Only the dollar might benefit. But in the long run, I think we need to keep observing how the policies are implemented and how he communicates and interacts with Trump. That's what really matters. So these short-term fluctuations and volatility, in my opinion, this volatility might last 3 to 7 days and is likely unavoidable. After this consolidation, as long as the US or Taiwan markets don't enter a bear phase, view this as a correction following a strong rally. Just monitor the fundamentals, sentiment, and news digestion. That is all you need to keep in mind. So you can see, even though it's considered more hawkish, if you look at the 10-year yield or the terminal rate, it didn't cause the 10-year yield or the terminal rate to shoot up to 5%. In fact, it actually dropped. The 10-year yield fell to around 4.2, and the terminal rate is still below 3.1. As for the number of rate cuts, it's still holding at more than 2. So if you say it's really because he got elected that the Fed won't cut rates or might even turn hawkish, I really don't think that's the case at all. I don't think there's any real pressure for that kind of situation to happen. All right, good evening to you all on the 20th. So about the sparkling water, where did Emily and the others go to have fun? Arthur brought the lady boss, right? Yeah, that's right. So impressive, really impressive, marrying such a great wife. Of course, her abilities and experience are really outstanding. After all, honestly, who else could become a Fed governor at just 35? If she has a strong background, that definitely helps, but without enough expertise. Even if you come from a privileged background, it doesn't mean you can just become a Fed governor at 35. Sure, maybe you could be an assistant or a special aide at the Fed or the Treasury Department, something like that. But to actually become a Fed governor, that's extremely difficult. At the Fed, the chair, vice chair, and governors hold top-tier roles. These positions are impressive. Regarding the US dollar index, there's a short-term rebound, a 0.2 uptick, but overall, it remains in a weak, volatile state. The dollar is still weak. There's just a short-term movement due to timing. A new chair might spark a short-term rebound to 96 or 97, but that's it. A complete reversal pushing the dollar back above 100 or 103 is unlikely in the short term. You just don't see that kind of strength right now. Honestly, Waller opposes raising interest rates and recently even supported cutting them. For the US dollar index, it may only edge up briefly. Regarding geopolitical risks, let's touch on that now. No matter what Trump says about Cuba, Greenland, or even Iran, whether it's negotiations or coordination, these are all good things. It means the temperature of geopolitical risk is cooling down, especially if he mentions that there are ongoing or possible negotiations with Iran and Turkey. That's a positive sign. What about crude oil prices? They should stabilize. Despite recent Iranian tensions and naval movements involving 10 vessels, with forces in the Persian Gulf, many feared Trump might attack Iran. That's why oil topped $65. But now he may negotiate with Iran. So today, oil plunged 5.72%, dropping back to the 200-day moving average. So in the short term, when it comes to oil prices rising or falling, you really only need to pay attention to one thing. Just watch Iran. If things fall apart with Iran, prices go up. If Iran is willing to sit down and talk, prices go down. As for things like OPEC Plus increasing or cutting production, whether they pause or maintain certain levels, that stuff isn't all that important. It doesn't have much impact. That's because overall, global demand for crude oil is currently cooling off. Global demand for crude oil is cooling off right now, okay? So even if you take the Iran issue out of the equation, the overall trend is still bearish, okay? Just remember that. It's just that in the short term, the Iran situation is causing bigger fluctuations. As for the Russia-Ukraine issue, there's talk of a third-party negotiation set for February 4th to 5th. Just let them talk. Just let them negotiate. After all, this isn't the first or even the second time for these three-party talks. So whether they end up with any real results, I think it's just a show, just for appearances. So whether it's Zelensky or Trump talking about a possible ceasefire in February, well, it's already been going on for almost 4 years now. Just let them keep talking. I don't think anything will happen that quickly. Right now, the market isn't really focused on the Russia situation. It's not really watching Russia. Anyway, good evening, Sakai Fengzhou. May I ask, with the recent downturn in gold and Bitcoin, is it a good idea to buy silver on the dip? That's a tough one for me to answer. You know why? Because right now, regulations prevent us from analyzing gold, silver, or Bitcoin. Oh, so for the gold, silver, and Bitcoin you just asked about, I really can't answer any of those. It's a bit of a hassle, but since there are regulations, there's nothing I can do. Right now, we can only talk about international matters, things happening in the US, and occasionally mention the Taiwan stock market. But for those three products you just mentioned, I can't play around with them or tell everyone where to open a position, what the price is, or what the timing looks like. However, I can discuss things from a broader overall perspective. At this stage, you have to remember that if the Federal Reserve keeps moving toward rate cuts, that will definitely be more favorable. This would push up the prices of gold and silver. But what if the Fed isn't in a hurry to cut rates? Or if people are worried in the short term that their stance is more hawkish? If the momentum for rate cuts actually weakens, then of course that would be unfavorable for gold, silver, and even Bitcoin. That's basically how you should think about it. As for the related prices or trends, maybe because of regulations, I can't go into a deeper analysis with everyone. All right, thank you for your support, Coco Lee. Thank you, Coco Lee, for your support. Okay, moving on. This is, all right, you're welcome. 3 minutes, you're welcome. Someone said, what a lousy regulation. But if there's nothing we can do, then there's nothing we can do. Let me tell you all about that Huang Huang Will with a yellow face. You know, sometimes there's just never enough time. I'm worried that if I keep talking, I might get called in by the regulators for a chat. This is just a really troublesome issue. Like, if today I were a financial influencer, a YouTuber, you know? As a YouTuber, I can speak freely about any stocks, discussing support levels and specific prices. I could even give direct buy and sell advice without issue. As long as I don't collect membership fees or manage trades, I can analyze freely without regulations. But if you work at a regulated financial institution like a bank or investment trust overseen by the FSC, you must follow strict rules. You aren't just representing yourself, you represent a company operating under FSC oversight. We must follow investment and advisory regulations, plus the Company Act. We analyze what we can, but absolutely cannot mention specific price targets. If we do, we risk fines or show cancellation, which is a real hassle. We simply can't analyze those things due to strict regulatory rules. These are just the rules of the game. That's how it is. Unless one day I become a YouTuber, if that ever happens, maybe I'll be able to say a lot more and really speak my mind. But it's fine anyway. Whatever comments you leave, I'll try my best to analyze and discuss everything I'm allowed to. I won't hold anything back within the limits of what I can say. Basically, if you listen carefully, you should be able to pick up on what I mean. You can probably also tell which direction your stocks or investment portfolio are heading, whether you should go long, go short, or just hold. Even though I haven't mentioned specific price points or forecasts, you can more or less get the idea. Alright, that's about it for this part. Now let's take a look at the economic data section. Sun Pei, right? Hi, Sun Pei. You asked, excuse me, teacher, will U.S. Treasury bonds still not perform very well this year? Well, not necessarily. It's not certain that they won't. The price of U.S. Treasury bonds, let me put it this way. Bond prices and interest rates move in opposite directions. Bond prices move inversely to interest rates. If there's a chance that interest rates will go down, if there's a chance for monetary easing, when interest rates fall, bond prices go up. All right, when interest rates fall, bond prices go up. So is there a chance for rate cuts this year? There's still a chance for rate cuts this year. So the general forecast is that there's room for 1 or 2 rate cuts. As long as there's room for 1 or 2 cuts, plus Trump gradually getting involved and the Fed being influenced in its policy decisions, the direction and strength of rate cuts will slowly increase bit by bit. And with this increase, plus this being an election year, if the Fed is willing to keep moving toward rate cuts, then in fact, as interest rates go down, bond prices will keep rising. So it's not likely to be like last year or the year before or anything like that. Even if things go down, it won't be as bad as before. Not that bad, really not that bad. So just keep a close eye on the interest rate levels, just pay attention to where rates are at, and you'll be fine, you'll be fine. Okay, Feng Zhao, I know, the main thing is to watch this direction. I'll talk about the trends, I'll cover the trends, and as for prices, that's basically how it is. Now, what about the central economic data? Tonight, watch the S&P and ISM manufacturing PMIs. Tomorrow is light on data, but several officials speak: Bostic, Barkin, and Bowman. Plus, keep an eye on the US JOLTS job openings. Wednesday, I think, is more important because the US and Europe will both release their services PMI data. Also, the ADP employment report will be released on Wednesday night. On Thursday, there will be interest rate decisions from the European Central Bank and the Bank of England. In addition, many officials will be giving speeches, so there's a lot going on. And what about Friday? That's even more important. The most crucial data this Friday will be the US non-farm payrolls, the unemployment rate, and also the annual revision of the 2025 non-farm payrolls, all of which will be released. There will also be the University of Michigan's Consumer Sentiment Index and many, many other things. Besides the speech by Jefferson, the vice chair of the Federal Reserve, on Saturday, everyone should also pay attention to Sunday. That's because Japan will be holding its parliamentary elections on Sunday. After the elections, they'll be appointing a new prime minister. What's her name again? Sanae Takaichi. He wants to secure a majority in parliament, so it'll be easier to implement his policies in the future. That's why he called for an early parliamentary election. So this Sunday, February 8th, Japan will be holding its parliamentary election. Let's see how the election goes. If it's like this, if the current ruling party wins the majority of seats, it will be a plus for Sanae Takaichi's policies, definitely a positive. Of course, the Japanese stock market would then be less volatile, and it might even move upward. So this Sunday, pay special attention to Japan's parliamentary election. As for earnings reports, let's look at the period from February 2nd to February 6th. There are a lot of companies in the US stock market reporting earnings during this time. If we have time, we'll track them one by one for everyone. For example, Disney's earnings report was pretty good, better than expected. Then, starting tomorrow, there are companies like Enphase, Palantir, and on February 4th, there are a lot of them. On February 4th, we have AMD, SMCI, Novo Nordisk, Infineon, and Uber. Most importantly, on February 5th, there's Google, ARM, and also companies like Masimo, Gilead, and so on. Then on February 6th, there's Amazon. These companies are relatively important as they have a significant impact on the market and the development of AI. Now, since we're talking about AI development, let's take a look. Jensen Huang, in a recent media interview, mentioned that he said now, for sure, he will definitely participate. He will definitely participate in this round of so-called investment in OpenAI. He will definitely take part, but the investment amount will not be as high as what the market was speculating last September. Like, is it going to be $100 billion or something? He said it will not be that much, but still, it will be them. This will be the largest investment and the largest investor in NVIDIA's history. As for the exact amount, he didn't say. The market had originally rumored that Amazon was going to invest $50 billion in OpenAI, but those are just rumors. So how much will Jensen Huang actually end up investing? We don't know. For example, his investment in CRWB, which is Core Web, was about $4 billion or so, and there may be more investments coming. Investment in OpenAI exceeds $4 billion, but even at $4 billion, if he invests $20 billion, if he invests well, or if he invests $50 billion like Amazon, let's say both Nvidia and Amazon invest $50 billion each, that's still a far cry from the $100 billion everyone originally expected, to be honest. If such a large gap exists, the momentum behind this AI perpetual motion machine will definitely be affected. But none of this affected him because before everyone thought, oh, it's Nvidia that's going to invest $100 billion in OpenAI, and then OpenAI would use that to buy not Amazon's, what's that other one that's been dropping recently? What's it called? Oracle. So Nvidia invests in OpenAI, and OpenAI uses that money to buy Oracle's equipment. Then Oracle goes and buys Nvidia's chips. So this whole supply chain is all interconnected, right? NVIDIA, OpenAI, Oracle, NVIDIA, OpenAI, Oracle. And now just think about it. If NVIDIA ultimately decides to invest in OpenAI, but it's not as much as everyone imagined, not the full $100 billion, then since it's not that much, when you go to buy Oracle's computing power, you don't need to buy that much. Investing 50 or 300 billion requires fewer chips, so NVIDIA's demand drops. This AI perpetual motion machine's energy might diminish, but it won't halt just yet. Right now, we're not really at the stage of a bubble yet. It's just that they're making more cautious investments and participating more carefully. That's basically how these private equity moves are playing out. And of course, the reduction in investment in OpenAI isn't as much as the previous $11 billion. People in the market are starting to wonder if OpenAI keeps burning through so much money, will they ever get it back? There are definitely some concerns about that. So who is OpenAI's biggest shareholder? It's Microsoft. So to some extent, this also affects Microsoft's stock price. Friday, the stock fell 0.74%, minor compared to the previous day's 10% plunge, mainly because despite beating earnings, gross margins are declining. Plus, markets fear high capital spending and OpenAI burning through their investment. There's no way for the returns to come back that quickly in such a short period of time. You keep investing and investing, so the cash flow just isn't coming back fast enough, you know? That's why people are worried. So Microsoft's stock price actually hasn't just been dropping last week. In fact, ever since it hit a record high of over $510 last October, it's been dropping steadily, falling below $504. How long did it take to drop to 420? About a quarter, around 3 months. So it wasn't just the earnings report that caused the drop. It's actually been falling for over 3 months. All right, so what about the future? Well, if Jensen Huang says they're going to reduce their investment in OpenAI, I think that will more or less make Microsoft, the big backer and rich dad of OpenAI, a bit uneasy, and it will have some impact. So in the short term, we think Microsoft's stock price will likely remain relatively weak. Short term, Microsoft stock remains weak. Indicators point downward, and the recent large gap is unlikely to be filled quickly. Among the Magnificent Seven, Microsoft looks the weakest, so it is better to wait and see. It's better to wait until it stabilizes before slowly picking it up at a bargain, or just take a safer approach. But if you're asking about Microsoft's long-term prospects, whether its fundamentals and stock price are good, honestly, they're all really solid. Everything looks great. If you look at their financial reports, every department, whether it's Office, 365, or all those cloud divisions, and their AI development, they're all still doing fantastic. It's impressive, but short-term noise will make the stock price look rough, so it needs time to settle. Still, it's very promising and worth watching. Another AI perpetual motion machine is Oracle. Oh, Oracle, now this one's a bit more complicated. In fact, last September, Oracle announced it was going to issue $18 billion, yes, $18 billion, which was the second largest offering in the market last year, converted to new Taiwan dollars. Converted to new Taiwan dollars, that's almost 600 billion NT dollars. That's a huge amount of capital raised through bond issuance. And this year, Oracle actually said it plans to raise even more, between 45 and 50 billion US dollars, which is more than double last year's amount. Last year, it was 18 billion, and this year they're talking about 50 billion. That's an enormous increase. Why? Because they need to expand their cloud infrastructure and meet customer demand. They mentioned a lot of clients like AMD, Meta, OpenAI, and many, many others. All we can say is, since they're constantly issuing bonds and borrowing money, and considering their free cash flow, FCF, is all being used up at present, according to their latest report released last December, their free cash flow hit negative $10 billion. If they borrow more this year, it's just robbing Peter to pay Paul. They might not stay afloat, so we must watch them closely. Last Friday, their stock also dropped by 2.62%. Monthly and quarterly moving averages are in a bearish alignment. The stock has dropped a lot, falling since September, down over 4 months now. Before the US market opened, this news triggered a significant pullback. Like Oracle, its pre-market is weak and the decline hasn't stopped. We haven't seen a bottom, so be cautious. It's still trending down and hitting new lows. Dropping from 350 to 164, it's nearly halved. It's nearly halved. Let's wait for it to bottom out and stabilize, as cash flow is a major issue. Jensen Huang met the 0050 group, but US and Taiwan markets keep dropping, disrespecting Papa Huang. That's true, but actually, these 0050 companies, they've already been going up for 4 years now. They've already risen a lot, really a lot, a huge amount. I remember looking at the Taiwan stock market over the past few years. On average, in 2023, 2024, and 2025, the Taiwan stock market has gone up about 20% to 25% each year. 23%, 24%, 25%, just rising like that every year. So just think about it. If the market goes up 25% in a year, that means if you put 1 million into 0050 in 2023, if you put 1 million into 0050 in 2023 and do not touch it at all, just leave it there, do not do anything. Leave it in 2023, leave it in 2024, leave it in 2025. In fact, by the end of 2025, your 1 million will have doubled. Your 1 million from 2023 will double by 2025. Why? It's the rule of 72. You take 72 and divide it by the percentage you earn each year, and that tells you how many years it will take for your assets to double. This is called the rule of 72. Let me say it again. Just learn it simply. You take 72 as a numerator and divide it by your annual investment return rate, and you can figure out how long it will take for your assets to double. For example, let's say you can earn 24% a year. Earning 28% annually beats Buffett. At 24% a year, 72 divided by 24 is 3. This means investing for 3 years, compounded annually at that rate, your money doubles. So what if you only make 8% a year? If you earn 8% each year, 8, how long will it take? 72 divided by 8. So it'll take you 9 years to double your assets. That's why this is called the penguin rule. Remember it. It's really useful. Really useful. Finally, let's check American Express. Revenue beat expectations, but EPS fell short, though still solid. 2025 revenue hit a record $72 billion. The 2026 forecast remains strong, with 9 to 10% growth and EPS between 17.3 and 17.9, matching expectations. It just means one thing. A good financial report means one thing. It shows that consumer spending is still solid and continues to grow. So this simply indicates that the US economy is doing fine, and consumer spending in the US remains strong. With strong consumer spending, the stock market naturally still has a lot of momentum. So when I look at American Express's financial report, what I mainly focus on is the impression it gives about consumer spending. It's more than whether their earnings are good or bad. It's what they reveal about consumers. The changes in credit card spending, the rise and fall of consumer spending are even more important because those figures let you see the overall economy, whether the US economy is actually good or bad. So for now, things still look pretty good. Everything's still okay. As for whether it will become Buffett's largest holding, I think it's just something to keep an eye on. Currently, the largest holding is Apple at $180 billion. And as for American Express, Buffett's stake is worth about $154 billion. So it's roughly the second largest. Now, if in the future American Express's stock price goes up, could it surpass Apple? That's possible too. But what does that mean? It doesn't matter much. If you're number one, is it you or Apple? It's not that important. Your portfolio value just fluctuates with the stock price. Whether it's number 1 or 2 makes little difference. It's just one of Buffett's top 5 holdings. Last Friday, American Express dropped 1.77%. You need to pay a bit of attention to this blue neckline here. This blue neckline, if the price can break above it, otherwise, honestly, everything else is meaningless. If it can get above this blue neckline, it'll be better for its future stock price performance. But right now, the 20-day moving average is turning downward. So to be honest, it's looking pretty weak in the short term. There's a lot of short-term volatility right now, so it might just keep fluctuating or stay in a choppy pattern for a while. If the price doesn't quickly get back above this blue neckline, there's a good chance it could correct downward, and it might even go down to test the 200-day moving average. A correction down to the 200-day moving average isn't out of the question, so just keep an eye on it. While fundamentals are solid, technicals must also align. They need mutual support. Look at this blue neckline on the screen. Breaking above this level will significantly aid future movement. That covers American Express. For US pre-market movers, IDEXX Laboratories is up 2.91%, and Estee Lauder rose 2.36%. These gains aren't related to earnings reports. It's because of Wasser, Estee Lauder's son-in-law. Since the family leader's son-in-law might become Fed chairman, a rising tide lifts all boats, pushing the stock up 2.36%. This kind of thing happens in the political scene of many countries. For example, let me give you an example. Say if Senator Tsai Ing-wen becomes president, or Lai Ching-te becomes president, or even if Eric Chu or someone else becomes president, it's the same deal. You just think about their backgrounds, the companies their families have invested in, and usually those companies' stocks will go up. It's the same concept, right? Also, for example, Take-Two Interactive stock went up by 1.5%, and Autodesk and ABB also rose by about 1.4%. It's not much with few representative companies. McDonald's rose 0.9%, but many fell. Decliners include lithium and energy firms like Albemarle, down 4.47%. Coinbase and various oil stocks also hit lows. ConocoPhillips and Occidental Petroleum both dropped about 3% as oil prices plummeted. Iran-US negotiations sent oil stocks down 2.26% in pre-market trading. Today, energy and tech stocks like Nvidia, Oracle, and Micron are falling. The market remains volatile, with strong pullback pressure after recent gains, so maintain cautious position management. If you didn't take profits or try to reduce your positions when the market wasn't hitting new highs in the past couple of weeks, that's okay. When the market pulls back, you can look for good companies to buy. Or if the relevant support levels aren't broken, there's no need to worry too much, because right now, the market isn't entering a bear market. Short term, some high-flying stocks are pulling back. This is mentally tough, but you must stay focused. The Dow dropped 0.36% last Friday, which is fine. It's holding near the quarterly moving average this month. The bullish structure Nasdaq dropped 4%. Avoiding the previous ascending wedge range is key. Breaking below it increases pressure. Yet monthly and quarterly averages and the wedge remain intact. Treat it as its lower support level. The S&P 500 dipped 0.32% Friday, but it's temporarily holding above monthly and quarterly averages. Crucially, as long as this blue trend line holds, there's no worry. So there's really nothing to worry about. So whether it's about the index or individual stocks, just remember, this week is packed with economic data and earnings reports. Lots of big things are going to come out all at once. Plus, there's the new Federal Reserve Chair named Waller. There might be some conflicting news in the market, so the pressure for a pullback after a big rally will naturally be higher. Since that's the case, whether you're investing in Taiwan stocks, US stocks, or managing your positions, you really need to be extra careful, okay? Anyway, as the market pulls back, we'll keep sharing information about various companies with everyone. Remember to take profits when prices are high, and when the market pulls back, it's safer right now to buy on the dips, not on the rallies. All right, that's all for the market overview before the US stock market opens, bringing you the latest updates. When class is over, don't forget to like, subscribe, and share for us. Finally, wishing everyone smooth trading, and we'll see you tomorrow.
Our company has no improper financial interests in the individual securities recommended or analyzed. The information in this program is for reference only. Investors should make independent judgments, evaluate carefully, and bear their own investment risks. If you don't want to miss the latest market updates, be sure to turn on the notification bell and hit subscribe. In addition, we have plenty of great video content on both Facebook and YouTube. Don't miss out. In our group, we share in-depth explanations of global financial events with you every day.